Now, when we come to recording the share of assets, this works slightly differently if what the venture has put in, its carrying value is different from its fair value. Because normally how this would work is simply look at what's on the joint venture balance sheet, which in this case was $300,000, and simply take your proportion of that. In this particular case, what we have to do is slightly different. So first up, we know we're going to be crediting interest in joint venture $120,000 for A and $112,000 for B. Nothing has gone on in this joint venture, and that is the debit interest in joint venture we had from previously. Now, I'm just going to show these amounts and then we'll work through them. So for A, the land is brought back at 48 and the equipment is brought on at 72. For B, the land is 72 and the equipment is brought on at 40. Now this is not as simple as simply going for A, 60% of land and equipment gives you those amounts, and for B, 40% of those of land and equipment gives us those amounts. And we can see that really clearly with land, because A has the biggest share of it, yet is showing a smaller amount than what B is. So the question is, how does this come about? So what each venturer does is effectively take its proportion of fair value if it did not put the asset in. So for A, it did not put the equipment in. So this amount here. Now this amount is because the equipment's fair value was 120, and 60% of that gives you 72. Now, it uses the fair value because even though it's recording things at cost, it doesn't know the cost of the equipment to be. All that A sees is the equipment worth $120,000. So you use the fair value in that case because that's all it can see. Now, the land is slightly different because the land, even though it has a fair value, we're looking at this number here, even though it has a fair value of 180, we're using cost, or A is using cost, and it knows the land is only worth 80. So it actually uses this number here and takes 60% of that, and 60% of 80 gives you 48. And so debit land 48, debit equipment 72 will give you the credit interest in joint venture $120,000. Now B does the same thing except B put in a different asset. So B put in equipment and sees the fair value of the land. So we'll start with the equipment. So equipment is 40, and this is because even though the fair value of the equipment is 120, the cost of the equipment, or the carrying value to B, is 100, and with 40% of 100 coming on board, you're taking these two amounts, multiplying them together, and that gives you 40%. With the land, even though the land's carrying value to A is $80,000, the fair value, and all that B sees, is the fair value of 180, and 40% of that is $72,000. And those two together, $72,000 and $40,000, gives you the $112,000. So even though they put in fair values of a certain amount, in this case being 180 and 120, we don't actually see those being the amounts credited to the interest in joint venture. We see 120 and we see 112 respectively.